if you put in your NOI assumptions, we will tell you definitively based on taking one quote versus another, which one you're getting the best equity multiple and IRR. And that's important because the best interest rate doesn't always ensure the best returns for you as an investor or for your syndicated investors. Often, if there is a positive loan constant, having higher leverage is going to get you the best return, even if the interest rate's higher. So how do you compare, a 4% loan to a 4.5% loan, but the 4.5% loan has 5% more leverage? Now the answer is a click.
Welcome to the Wealth Through Real Estate Investing podcast, your source for real-world strategies focused on creating long-term wealth, cash flow, and financial freedom through real estate. Through guidance, tips, and stories of highly successful real estate investors and thought leaders, we provide you the tools to succeed and reach the lifestyle you always wanted. And now your host, Dwaine Clarke.
Hello and welcome to the Wealth Through Real Estate Investing podcast. This is your host, Dwaine Clarke, and today we have Tim Milazzo. Tim is the co-founder and CEO of Stax, an online platform for commercial real estate loans. Tim, thank you so much for joining us on the show. How you doing, my friend?
Dwaine, doing great here in New Jersey this morning. Thanks so much for having me on your podcast.
Absolutely. Yeah, look forward to it. We met over the summer or before the summer at a Boston meetup, and was kind of, meeting different people, learning about what each other's business. I was pleasantly surprised to kind of learn about this online platform. I've heard of kind of like Rocket Mortgage and, Lending Tree and different stuff, but nothing specifically that I known of on like kind of like on a higher scale on commercial real estate loans. So this is particularly a very interesting thing because I deal with a lot of investors, and I have kind of like my network of mortgage brokers that I refer out to, but sometimes it's not a good fit. So I'm kind of glad to learn a little bit more and see if this can add a lot of value to our listeners as well as my clients. But before we kick things off, for people who are not familiar with your background, I know you've been on a lot of podcasts and shows, and write a lot and have a lot of information out there. But would you mind kind of sharing about how you got started in real estate and a little bit more about your company?
Absolutely. Thanks so much, Dwaine. So my first exposure to real estate was actually through my family. My father was a commercial real estate leasing broker. And he worked in Manhattan. I grew up in New Jersey, where he would come home and around the dinner table, he'd tell us about deals that he's working on. And sometimes it would be about a tenant that he's trying to find office space for, or a landlord and the way they're trying to clean up their building in Times Square, which was not what it is today, a generation ago. And through all of these real estate stories, I thought real estate was an interesting business. And yet, I didn't think I would be good at being a broker like my dad was. I studied finance in college, and I interned at a big real estate company and in finance. And I was never very salesy and, going out there and handing my business card to everyone and trying to win business. I was more analytical, and honestly, I loved computers growing up. And, I was a kid when we got our first modem and first access to dial-up internet. And I thought the internet was amazing. And I loved video games. And that brought me in a way that brought me to big tech companies to start my career. So I actually worked in operations and sales, and later in sales roles, first at Google in their advertising technology department, and then at Facebook in a similar capacity. I didn't get back to real estate until years later, when I realized that technology was really coming to real estate in a big way. And you mentioned in your intro with Rocket Mortgage, they're actually the #1 mortgage lender on the residential side in the country. And they're trying to fully digitize the mortgage process on that side, because it should be easier to get a mortgage. And now all the more so on the commercial real estate side, I saw an opportunity to bring a technology operation to getting a commercial mortgage, because in talking to a lot of real estate investors over the last few years, that process is just behind the times, behind other areas of fintech, even behind other areas of real estate tech. And we are working to make the commercial mortgage process more seamless. So I've now been in real estate for the last 4 years, working on Stax as a platform for the last 3.5. And we launched it 2 years ago in 2017. And that's my spot in real estate now, is trying to make the commercial financing process more seamless, and easier for real estate investors to navigate.
Yeah, beautiful. So did that idea come out of kind of like said talking to different investors, or were you kind of looking for a need? I mean, you have the technology background, and you just kind of looking to, solve a problem that was out there, and this kind of popped up. How did that process, and how did it kind of evolve over that time?
Yeah. So back in 2015, I was still working at Facebook at the time. I actually went to a real estate tech meetup event in New York City. And at that meetup, I saw a crowdfunding portal present, and it was eye-opening to me. It was so interesting to see them solving the problem with technology of people getting into real estate deals as a passive investor. And the crowdfunding scene was really exploding at the time. There were like dozens of crowdfunding portals for real estate that were popping up. And ultimately, when I went and sat and counted how many crowdfunding portals there were, I found over 200 real estate crowdfunding portals. And it was so obvious to me that, wow, this is a huge market, this huge opportunity, but only a few of these portals are really going to win. They're all essentially have the same business model and same business plan, and they're all looking at the same side of the equation, which is how do passive investors get into real estate deals, and really kind of simplifying that, that finding an investor process and syndicating to a lot of investors. And to me, I thought, well, who's building a platform for the actual investor that has a deal and is trying to figure out where the best capital for their deal is coming from? From banks to these crowdfunding portals and everything in between, there are so many options out there for how you get your deal financed. And in researching the space, I didn't see any one platform bringing simplicity to that shopping experience of finding the right capital for your deal. And I also had friends that had left big companies like Google and Facebook, and I met them there, that had left the advertising technology space that I was still in and were attacking fintech problems, had raised rounds from venture capitalists, hooking up consumer loans online and doing analytics for investors. And I thought, if they have started businesses in this space, I feel like I could do that too. And it kind of led to a perfect storm of really getting the itch to go out and build. And I didn't know nearly enough about real estate finance at the time. I have learned a ton over the last 4 years, but in those early days, I just went and sat with as many real estate investors as I could to understand their process, the way they look at getting capital for their deals. What are the pieces that could be solved with the technology platform, with a service that is a next generation.
Do you think, because you have the Rocket Mortgage and you have the other type of stuff on the residential side, why don't you think like a lot of these larger companies that are like backed by huge VC to get into the commercial side? Is it because you had mentioned the word simplicity as far as for the residential side? Is that maybe the reason why many haven't kind of dropped in there yet? And what kind of allowed you guys to kind of take advantage and fill that void that was missing?
Right. Well, consumer mortgages are a different product than a commercial mortgage. The underwriting at a base level is different. It's very commoditized really on the residential mortgage side, where you're not really, there's not much to underwrite in a home. Yes, an appraiser is going to tell you how much it's worth, and you're going to have a sales price, and those need to be in line with the size of the loan that you're getting. But the rest of the underwriting is all about the borrower. What's your credit score? How much do you have in your bank account? What's your income history over the last 3 years? And on commercial real estate, while those things matter too, and a bank is going to ask you those same questions, the underwriting really centers on the piece of real estate. What is the historical NOI? What's the expense ratio? Why? If it's a value add play, what is a reasonable amount of income that you can really pull out of that property? Let's look at that as far as a location and the demand in that location. And the underwriting process is so different that I think it's hard for a consumer or residential mortgage company to just fit their way into the commercial real estate process. I think we've seen that with real estate agents, where to go from being a real estate agent, just helping people buy and sell homes, to being a multifamily investment sales agent is really a career change. It's an entire class of knowledge that you need to gain. And same thing on the financing side. To go from residential mortgage to commercial mortgage requires a huge upgrade in the knowledge that you have. So I don't see a lot of, not just in mortgages, but I don't see a lot of residential real estate people or companies that just naturally shoehorn into the commercial real estate space without learning a ton, gaining that experience, gaining those contacts, because they're really all different.
Can you kind of run us through kind of the process of StackSource? So, you have a borrower, they know about the company, they want to go through. So they go to the website. What's kind of like the step-by-step process, and what can a person expect to see and, fill out or whatever? What's kind of explain that for us?
Sure. Yeah. So StackSource, the way that we've built it now and what we've learned over the last few years and the way that it needs to be is we're a full service commercial financing platform. That means you actually get assigned a capital advisor that is walking you through the process. These people are former commercial mortgage brokers, lenders, and developers that have joined StackSource to help hook up these financing deals. But we have a more easy to navigate process through our technology platform that helps you reach more lenders more quickly and more easily. So what you would see if you went to stacksource.com and you clicked get a loan, the platform is going to start to ask you questions about your deal. So you'd say, it's a multifamily deal and it's an acquisition, and here is the address. In knowing the address and it's a multifamily acquisition, we're already pairing our database of hundreds and hundreds of commercial capital sources down to the dozens that we know are relevant for multifamily acquisitions in the geography that you've given us. The platform continues to ask questions until it knows the right set of 10 or 20 lenders that are going to be most competitive for your commercial financing scenario. So that's going to include loan size and how much NOI there is on the property, and understanding your strength as a borrower. And it's going to ask these questions. There's about 10 or 12 slides that you fill out depending on the deal scenario with simple questions that are answered. You upload your pro forma and your personal financial statement, and you basically give the platform enough where it automatically creates an offering memorandum that can then be sent to those matched lenders. So you're cutting out days of the process where a traditional commercial mortgage broker would be putting together a PDF of the same information. They're going to ask you a lot of questions over the phone. You're going to have to email them a lot of attachments. 4 or 5 days later, they're going to have a PDF that they're ready to send around to all these lenders. We're ready to send that package to lenders today. And as soon as your deal is approved by a StackSource capital advisor, we often have a conversation with the borrower right up front about what they're looking for, what the market is likely to give them at one leverage point versus another. But we're very quick in being able to get that deal out to market to the exact right lenders who have told us the criteria of what they're looking for. And then you get quotes back and alerts back from the platform when you have a new quote. All the comparison, all the analysis is right there on the platform. Without ever opening up Excel again after your pro forma, we're going to tell you taking one loan quote versus another is better for your IRR and your cash on cash return. And it's all going to be centralized and streamlined within that platform.
Yeah, I like that a lot, because that was kind of, you answered my other question, was kind of if it was a service base or more like a referral where they'll just kind of spit out 10 lenders and, hey, here's the call number, and then you got a call and you get a voicemail. And then you got to go through so you're basically chasing it. So it's basically you're doing all the work yourself anyway, because I've seen services like that. But yeah, that's awesome that you're able to kind of hook someone up with you said a capital advisor. They kind of talk look what you're looking for, and then pair you up with the proper people geography wise for that specific deal that can work with you. As far as kind of like how many, you mentioned hundreds of lenders, like how are you guys, is it because of you guys are actively adding people by kind of talking to them about, here's the type of investors that come into our platform, or, how do you kind of work with these guys, and are they any different from the ones that if you went to go look for them yourself out on the marketplace?
Yeah, good question. StackSource has between 400 and 500 commercial lenders on its platform at this point. And I wish I could tell you that we had some automated way of scraping information off the web and automatically looking for the next best lender contact. The truth is, Dwaine, that these are relationships that we've built over the last several years. And in the case of capital advisors that have joined our team, some of them have nearly 30 years experience in commercial real estate. These are people that we've done deals with for years and decades. Because the quality of the lenders on the platform and their ability to execute on deals and quotes that they put through is of utmost importance. Otherwise, what we're doing would fall apart really quickly. So these are lenders that we have a relationship with. Now we take the next step and have them put their parameters into our platform so they can match instantly. And so it's not just based on the advisor's relationship only, but we can identify those who have hot capital for different types of deals. We record every quote we ever see within our platform, so we can see that some credit union that you didn't even realize had a commercial lending department has the best rates around for retail in South Carolina right now. We're able to identify those trends so we can get better deals for our borrowers. And that's across banks, credit unions, CMBS, Fannie Mae, Freddie Mac, and life insurance companies. So we try to cover the entire market. We do have private lenders and debt funds as well, to the extent you're working on a construction or value add deal. But it depends on the type of financing you're looking for. And we're going to try to talk with our borrowers about really what they want to accomplish. For some people, it's the longest term loan they can get. They would love to lock up a deal for 15 years and just cash flow for the rest of really their life and maybe hand it off to their kids. And for someone else, they're looking to do heavy value add in years 1 and 2, and an interest only loan over that period is going to be the most appropriate financial product for them. So we have a wide array of different lenders, and it's more similar to a mortgage broker would be. We're not a direct lender on any product ourselves. StackSource is simply the platform that allows those lenders to compete. Some lenders don't even like StackSource because we make it so hard for them to win deals because we find somebody else with a better rate all the time. But that's in the benefit of the borrower.
And if you think about it, as where we're heading to in the technology side, everything's going to be going online. So at some point, there's going to be some added competition that's coming in there. So that's awesome. And then you guys cover pretty much all asset types: single tenant, net lease, office, multifamily, of course.
Yeah.
So you pretty much cover everything.
Yeah, we've done a lot of, in our first couple of years, so the platform launched in 2017, we've closed the most in multifamily, retail, and office. We absolutely have done a couple of industrial deals as well. We have the capability to do hotels and some other asset types as well. So we are going to get matched to different lenders depending on the type of asset that you're working on our platform. But we have particular, expertise in multifamily and retail and in office where we've done the most work.
And then you guys kind of serving as a capacity of like the mortgage advisor. So you guys kind of getting compensated on that end as on the front end as well as back end. How does that work out as well?
Right. Good question. So first of all, our fees are transparent on StackSource, and you can see on a quote by quote that come into your comparison what the StackSource fee would be to close that loan. We take nothing up front. You can see the StackSource fee that we're charging on typical multifamily acquisition. And we get you competition between banks, credit unions, and agency. You may see a 1% fee from StackSource right attached to the quote to close. And we're trying to make that part of the process transparent as well. It can vary a little bit based on deal size and scenario, what might be appropriate and how much service our team is requiring, but we never charge anything up front.
Oh, very cool. As far as kind of getting awareness from other borrowers, because I deal with a lot of clients, and sometimes they ask me like, where do I go for financing? I'll know like a couple guys that I can refer them to get more information. You guys are working with real estate brokers and stuff to kind of feed you guys clients and stuff like that.
Yeah, absolutely. And we even have a referral program, and that's most commonly used by sales agents. We've seen a couple of financial advisors take advantage of this too, where they see that their clients are working on a real estate deal and they're going to send us an introduction to their client. We're going to take really good care of them, get them great rates, terms, and make them happy with the process. And we're able to pay a referral fee. Now, that's actually something that's not usually possible on the residential side. And StackSource, for a variety of reasons, doesn't touch like single family residential assets or anything under 5 units, unless there's a commercial component. So we're 5+ unit multifamily commercial, and we're able to pay referral fees for any property that we finance. That somebody is sending our way. Some of our referral partners even get a referral code that we give them, and they can send their own StackSource link out. And if somebody clicks on that and ends up getting financed with StackSource, even if it's 6 months later, we can track that through our platform. And we're working on a referral dashboard where you can actually log in and see all of the deals you've referred to StackSource. If they died somewhere along the process, like the acquisition didn't actually go through and some other buyer won or what have you, you can see the status, you can see what deals were funded, and you can see limited information about like the the deals that you sent across the Stack source. And that's something that we're going to be launching early next year.
Awesome. Yeah, there's a lot of kind of add on to that. If maybe we can elaborate on it. One of the features that I like about it is that you said that that they kind of side by side comparison with all of the quotes, so it's like easier for you to see, because it'll be nice for a person that's borrowing to kind of see exactly everything on one sheet, and they're able to make a more sound decision instead of like kind of like, okay, I got to open this document and look through this and look through that, and then you get a phone call here, and so it's just a lot easier. And also, can you kind of elaborate on some of the additional features that you guys plan on implementing in the future?
Yeah. So the craziest thing I've seen for a borrower to do to try to compare commercial loan quotes to each other when he's gotten multiple term sheets back from different banks is actually take their Excel document pro forma, put in the debt assumptions for one of the quotes, save a copy with one name, then open it back up, put in the debt, like the interest rate and the amortization and the debt assumptions for another quote, save that with another version. And now all of a sudden they have these different versions of the pro forma with all these debt quotes plugged in, just so they can see which one is a better return for themselves, for their waterfall investors, et cetera. And we saw that and we thought, oh my goodness, that is so much work that somebody is doing to try to figure out what is the best financing scenario. So we built, and it's still in beta today, but it's called our loan analysis screen, where you can basically click on one of the quotes that you get in StackSource, and by putting in your pro forma assumptions, basically telling us, what are you expecting to get in NOI from this property moving forward? We're not an NOI calculator. There's plenty of places to do that. Most people do it in Excel. You have to understand the asset. If anybody could automatically calculate future NOIs, they'd be a rich person. But if you put in your NOI assumptions, we will tell you definitively, based on taking one quote versus another, which one you're getting the best equity multiple and IRR. And that's important because the best interest rate doesn't always ensure the best returns for you as an investor or for your syndicated investors. Often, if there is a positive loan constant, having higher leverage is going to get you the best return, even if the interest rate's higher. So how do you compare a 4% loan to a 4.5% loan, but the 4.5% loan has 5% more leverage? Now the answer is a click. You click on one and you click on the other and you see which is the higher IRR. So we've tried to make that very easy. We have a lot more technology features coming. So my co-founder and chief technology officer is a software engineer that also worked at Google in the past. And he is today working on the next iteration of StackSource's underwriting checklist, so you know actually what you should be uploading to get the fastest responses from lenders and the most accurate quotes. That's something that is going to be launching by early next month, depending on when this podcast comes out. So November 2019, there's a new checklist coming out on StackSource, so you can easily get through the process with all the attachments you need to provide. There's a lot more coming. It's going to be auto data hookups. So you can see, so our lending partners can respond more quickly with more accurate quotes. It'll tell them the population and demographics of different areas and some real estate stats about what things are trading at, so they can underwrite more quickly.
Wow. Yeah, that's awesome. And is it just primarily desktop, but also mobile as well?
So you can only create a loan request on desktop right now, and that's because you need to attach something that tells us what the price is going to be and a little bit more about the property. The part that we made mobile friendly first was actually for our lending partners and being able to review loan requests on the go. So if you have a lending partner that's going to be out of the office for the rest of the day, they're actually able to get back to the Stack Capital advisor more quickly and respond as to whether they're declining that loan request or whether they're quoting it, and they can do that from their phone. For the borrower, you can see the project on your phone, but most of creating it and uploading attachments is still done on a desktop.
Okay, cool. I just think it's a very, very good platform. Like I said, now I heard of it on this level, the way that you guys are doing it, and it's just going to be rethinking the way people are going about this. So you guys have an excellent product. For people to learn a little bit more about you, what's kind of like a typical day for you as a CEO, and do you have any special morning routines?
So my morning routine routine. I've got 2 young kids at home. It's important that if I want to start off right, that I try to wake up before they do. I do not have 100% success rate with that. And I love to be able to get to the gym if possible, because your physical health, I think, is really tied to your mental health and your energy level. I'm not 100% success rate on that one either, but I try. But the one thing that's non-negotiable with me is I spend some quiet time on the spiritual side, and I try to do that between 6 and 7 a.m. Dive into, for me, as a Christian, it's scripture in the Bible, but really spend that time with some reflection, with some prayer, and with some reading. If I can, I get to the gym before my 4-year-old preschool daughter wakes up. Have a shower, try to eat breakfast with the kids when I can, and then on to the workday between 8 and 9 o'clock. If I have gotten to that point and I've hit the entire checklist, I'm usually really cruising at that time, and I find that my energy level's higher. I find that I usually don't need the caffeine if I've done those things. On a less successful morning, it might be a cup of green tea or something to kickstart me and make sure that I'm really cranking through emails. But email first, calls with my team on mission critical deals to see where we are, because we're very hands-on on deals in the process and making sure that they're closing on time, and that the lenders are doing the right thing on our platform. And then it varies from there. I'm talking to our CTO about the new features that we're putting out, and looking at maybe a demo version of the platform of next week's features that are going to be coming out. Checking in with our capital advisors, talking to them about deals, talking to a client about a deal that they're thinking about pulling the trigger on, and what financing might look like for them. Usually, if I can do a few of those things and then hit lunch, that's going to be a successful day.
Awesome. Yeah, we have some similarities. I have a 2 and 5-year-old, so I know definitely the importance of getting up before everybody, because if not, like, your day just doesn't start off properly. So, amen to that. So, what are you most grateful for, Tim?
Man, I'm healthy. I've got a healthy family. I grew up in New Jersey, outside of New York City. We live in a very free country where we're able to do the things that we're passionate about, and I'm very grateful for that. So family and being able to spend time with them on the weekends and have that type of lifestyle is, very important to me, and I'm very grateful for that.
Awesome. So how do people get started? So they just go to the website, fill out a kind of registration form. Can you take us through that process?
Sure. I would say half our clients start online because they like to feel in control of putting the loan request into the platform, seeing the matched lenders right away, tweaking what the lender will see once the deal is approved. The other half really are starting with one of our Stax Capital advisors. Maybe they met at an event, or they have developed a relationship with on other deals. Starting with a phone call, they like to hear from the capital advisors what they're seeing in the capital markets today or this week. Like to talk about what might happen if they acquire some asset, or if they're looking at a construction loan scenario, and they like to start in that conversation. We love either one. Either way, information getting into the platform to streamline, and that conversation with the capital advisor is going to happen. So whether you like starting with a conversation, or you like starting with your hands on a keyboard and in control, you can start either way with StaxSource. So you can start at staxsource.com. You can click Get a Loan. You can check out recent deals that we've done. We have a deal map on the bottom of our homepage. You can, get in contact. There's a chat feature on our website as well, if you just like to chat with a capital advisor about something that you're thinking on. But if you're getting an LOI on a property, you should be talking to somebody about financing. You don't want to get to the end of your due diligence period before you shop for a loan. Even if you have a relationship with 1 or 2 local lenders, that's great. But give other lenders a shot to give you a quote on financing as soon as you can in the process. There are different closing timelines for different lenders, and getting them looped in right at the LOI going in is probably the best bet.
Awesome. Yeah, that's some great tips there. Yeah, I really appreciate it. Love learning a lot more about the process. Like I said, this is really the newest changer, because I'm talking to investors all the time, and they're always asking, like, financing piece if they're not going to buy it cash. And this, you had mentioned, to give yourself the most options, let these lenders compete for your business. And like I said, it benefits everybody. And like I said, it's a good source. So it's staxsource.com. Tim, thank you so much. I really appreciate your time, and look forward to connecting with you again soon.
Thanks so much, Dwaine. It was awesome.
Take care.
Thanks for joining us on this episode of the Wealth Through Real Estate Investing podcast. Don't forget to subscribe and leave us a review on iTunes or the listening platform of your choice. Also, please check us out at DwaineLClarke.com, as well as find us on Facebook for more useful content and resources.